Welcome to Neo Space. Subscribe and hit the bell icon for updates. For decades, the petrodollar system, oil priced in US dollars, has anchored American financial dominance. Now, with Saudi Arabia and Qatar joining BRICS and shifting to selling oil in Chinese Yuan, the global order is being rewritten. This move challenges US leverage, deepens ties with China, and signals a coordinated push for a multipolar world. The expanded BRICS bloc is reshaping trade, finance, and power politics, ending the era of US-centric economics. Understanding this shift is crucial, as it will impact economies, businesses, and daily life worldwide. The dramatic pivot by Saudi Arabia and Qatar began in the wake of a rapidly changing regional landscape, where old alliances were suddenly thrown into question and new threats emerged almost overnight. After the September 2025 Israeli strike on Qatar's infrastructure, the Gulf was left reeling. The attack not only caused widespread physical damage but also sent shockwaves through the political and security establishments of the region, exposing just how vulnerable even the wealthiest states could be. The US response was seen as weak and indecisive, shattering Gulf confidence in American security guarantees that had been the bedrock of regional stability for decades. For many Gulf leaders, this was a wake-up call that the old order could no longer be relied upon. This exposed deep vulnerabilities in relying solely on the US for protection, prompting Gulf leaders to urgently reassess their strategic options and seek out new alliances that could offer both security and respect for their sovereignty. The incident accelerated a shift toward China and Russia, as both powers presented themselves as reliable partners. BRICS, in particular, offered a more attractive, non-interfering partnership, promising economic cooperation without the political strings often attached by the West. For Gulf states, joining BRICS quickly became a strategic necessity, not just an economic choice. It was a way to assert independence, diversify their alliances, and ensure their voices would be heard on the global stage. The Gulf states realized that their immense wealth and energy clout, while powerful, didn't guarantee protection from external threats. The illusion of invulnerability was shattered, forcing a fundamental rethink of their security strategies. This profound sense of abandonment by traditional allies drove them to diversify alliances, embrace new economic partners, and even begin holding reserves in yuan, signaling a major shift in global financial alignments. Ultimately, the move to BRICS was fueled by both economic ambition and urgent security needs, marking a new era in Gulf diplomacy and reshaping the balance of power in the region. With Saudi Arabia, Qatar, UAE, and Iran joining, BRICS has become an energy superpower. The bloc now controls over a quarter of global oil production and two-thirds of proven gas reserves. This concentration gives BRICS immense leverage over energy prices and global negotiations. The West, once able to dictate terms, now faces a united bloc that can coordinate production and trade outside US influence. BRICS can prioritize member states, invest collectively, and insulate themselves from Western sanctions. The West is now a price taker, not a price maker. This marks a fundamental shift in global power. The world is only beginning to grasp the consequences. Selling oil in yuan is just one part of BRICS' broader plan to build a financial system independent of the dollar. This move is symbolic of a much larger shift, as BRICS nations seek to reduce their vulnerability to fluctuations in the US currency and the influence of Western financial institutions. By conducting major commodity trades in their own currencies, these countries are laying the groundwork for a new era in global finance, one where the dollar is no longer the only game in town. To support this vision, BRICS has developed robust alternatives to SWIFT, the dominant global payment messaging system. China's CIPS and Russia's SPFS are not just backup plans, they are fully operational networks that allow member countries to process cross-border payments securely and efficiently, even in the face of potential sanctions or restrictions from the West. Currency swap agreements and direct trading pairs further bypass the dollar, enabling countries to settle major deals in their own local currencies. This not only reduces transaction costs, but also insulates their economies from dollar volatility. Increasingly, large-scale trade agreements, especially in energy and infrastructure, are being settled without touching the US dollar at all. The New Development Bank, or NDB, is another pillar of this infrastructure. By lending in member currencies, the NDB is helping to deepen local liquidity and foster economic growth within BRICS countries, while also reducing their reliance on external, dollar-based financing. Together, these efforts are creating a self-sustaining economic loop within BRICS, where financial resources circulate internally and strengthen the bloc's collective resilience. The bloc is methodically building economic sovereignty step by step, ensuring that its members have the tools and infrastructure to chart their own financial destinies. This growing infrastructure acts as a shield, protecting member nations from Western financial pressure, sanctions, and sudden shocks in the global system. The de-dollarization project is quietly but steadily transforming the landscape of global finance, signaling a future where economic power is more widely distributed and less dependent on any single currency. De-dollarization is no longer just a theoretical concept, it's unfolding before our eyes, as the Petro-Yuan emerges as a credible and increasingly influential alternative to the US dollar in global energy markets. For decades, the dollar has been the backbone of international oil trade, but now, a significant shift is underway, challenging the very foundation of the system that has dominated since the 1970s. Saudi Arabia's landmark decision to accept yuan for oil sales has dramatically accelerated this trend, sending shockwaves through financial markets and legitimizing the Petro-Yuan on the world stage. This move signals a new era in which energy exporters are no longer bound to the dollar, and it has inspired other nations to reconsider their own currency strategies. By early 2025, yuan-denominated oil deals accounted for a remarkable 24% of Brent crude trading, a figure that would have seemed unthinkable just a few years ago. The Shanghai Energy Exchange has seen a surge in trading volume, reflecting growing global confidence in the yuan as a medium for major commodity transactions. This seismic shift is reducing the structural demand for the US dollar, putting downward pressure on its value and threatening America's long-standing ability to finance deficits at low cost. As the dollar's dominance wanes, the global financial landscape is being reshaped in real time. In response, central banks worldwide are diversifying their reserves at an unprecedented pace. Gold has now overtaken the euro as the world's second most traded reserve asset, reflecting a growing desire for stability and security amid currency uncertainty. BRICS nations in particular are ramping up their gold holdings, signaling a collective move toward a more multipolar and resilient monetary system. Their actions are encouraging other emerging economies to follow suit, further accelerating the transition. The era of a single dominant reserve currency is drawing to a close, replaced by a more complex and diversified global order, where multiple currencies share influence and power. Around the world, nations and investors are embracing a basket of currencies and assets, seeking balance and security in an increasingly unpredictable financial environment. The US sees BRICS' rise and de-dollarization as a direct threat. The Trump administration responded with tariffs, 10% on all BRICS imports, with threats of 100% if a common currency emerges. These measures aim to make abandoning the dollar costly and to fracture the BRICS alliance. However, broad tariffs risk retaliation, higher US inflation, and global supply chain disruptions. Aggressive tactics may only strengthen BRICS' resolve to build alternatives. The US is also leveraging institutions like the IMF and World Bank to counter BRICS initiatives. But as credible alternatives grow, US influence wanes. A new economic Cold War is underway. The end of the petrodollar and rise of a multipolar currency system will impact everyone. For Western consumers, a weaker dollar could mean higher prices and borrowing costs. Governments may face tougher choices on debt, taxes, and public services. For BRICS and developing nations, local currency trade offers stability and new opportunities. The new development bank can fund infrastructure without Western strings attached. The global economic order is becoming more balanced, but also more volatile. Ordinary people must pay attention. Global shifts now affect personal finances directly. The era of economic certainty is over. We're all part of the new game.